Morning briefing show. I'm your host, Markus Gabel, with my moderator, Anna, in the back. And we want to say thank you to Admirals that we can do that Monday to Friday, right before the UK market will open in around 1 hour. And I want to say hello wherever you are around the world. On YouTube as well, Simmers, Thomas, Don, Lewis, I can see you on Zoom as well. And it would be a great pleasure if you give us your like on YouTube. Just one button you have to click. And if you want to get in touch with me, ask whatever you want in this webinar, or maybe on YouTube or on Twitter as well. So a lot of guys follow me on Twitter right now. There I share all my ideas. We can get in touch there and we can talk about everything what is responsible or what is related to trading. So, and yeah, we have a lot of things to talk about today. So I guess we switch to my chart. And again, feel free to ask whatever is in your mind so we can talk about almost everything. Chino, wonderful, good morning. So, and then I can see your names. I feel like familiar. It's like having a family with you. I love it, guys. So you see what we expect this week about our trading. You know, we are not day traders. We are swing traders in 4-hourly chart and daily chart. And today I want to introduce you an additional setup about weekly chart, because one of the most important things in real successful trading is to kind of diversification through the markets, but also through the time frames. And our special topic, the educational part today, is what the biggest mistake in trading ever. And this is what I want to ask you today. Alexander, wonderful, good morning as well. Albert, wonderful, good morning. And I want to, I spent the weekend to go through your charts. Those of you that sent me the FX Blue account, I went a little bit through the charts and I found two trades of one of you. I need to talk about it. But this is, I'm doing not to blame you. That's not the job. That's not what we are doing here, because we want to work together. And I want to share my knowledge with you, and I'm a little bit your mentor. This webinar doesn't replace coaching, of course not. So if you want to become successful on a faster way, then you should invest instead senseless money in the market, invest in a mentor. So this is most important thing. So what we expect today, to be honest, nothing important. The rest of the week is more important, like Royal Bank of New Zealand and some other numbers we expect today, the rest of the week, but not today. So that means we can switch immediately to our charts, and let's have a look at our running trades, how we should manage them. And here we go. We start with Australian Swiss franc in 4-hourly chart, of course. And Jackie, wonderful, good morning to Kenya. I love it so much. It's like talking to the world. I appreciate it a lot. I'm so grateful that we can increase the numbers of our family around the world. And I'm absolutely sure that we can change something in this industry together with Admirals. Let make trading great again. And this is what we have to do. Okay, this is Australian Swiss franc. We are in profit, actually, which means we sold half the position. And you know what? Let's make the trade safe. And here we go. We trail the stop loss into profit. So nothing can happen anymore. So where is the final target? Final target is, of course, point of control. And we have a lot of space to go. But to be honest, I expect that we will reach this zone first, and then we will see what happened then. if the price will remain there, or maybe the price will go deeper. But if we reach this zone, then everything is fine. So let the trade running, okay? Never intervene without a plan, of course. Never intervene into your trades without a plan. The plan is maybe we will see the next correction. That's the normal behavior. After every movement, the next correction must come and will come, but I don't know when. But I know that it will come, but the trend is still stable. So we sold half the position. The stop now is trailed in profit, and you should do that too. If you're with me in this trade, then you should trade your stop loss into profit. It's kind of feeling, you know, we are human beings and we feel something. Of course, I'm happy that we feel something, but in trading, it could be the end of your life in trading if you have too many emotions in trading. So how we can reduce, and this is one of the main jobs we have to do in trading, to reduce the emotions in trading. And this is how you can do it. Ron, wonderful, good morning. And first of all, with our partial trades, if you sell half of the position, for example, and then if you far away in the profit, yeah, come on, trailer stop in profit. Everything is fine. So next one, it's New Zealand dollar, Canadian dollar. So we have two different trends here, as you can see. So first of all, the main trend is facing downwards. And as expected, we reached the point of control exactly. And now, but we can also see that there is developing a new secondary trend, which is facing upwards. But there is no, how should I say, there is no reason to intervene into that trade. So I make an alert here above this last high. And then if we will have a close above that point, then I guess we can stop this trade. We can take out the money off the desk. So, but it's not time now because we are within the red zone and the market says, okay, we are fine with that price. So the probabilities for a trend continuation up or down is really less. Maybe it's around 50-50. And this is not what we have to do, okay? Not 50-50, we need high quality trades. And this is what we want to train this in our sessions every morning, to find 5-star trades, 5-star high quality trades, yeah? That's fine. Based, of course, on our law of probability, never forget that. So next running trades, still US dollar, Japanese yen. Well, actually, we are in profit and with 400 pips at the moment. So the point of control is still at 105.43. So basically, there is a lot of space to go down, but the main trend is still facing upwards. But now we can see, and this is really interesting. Look, here with this candle right now, the last candle, we see high volume, which means there is a secondary facing downwards trend. And this is really interesting. So, but the price still hit this correction zone. So actually, I think we must not finish this trade. If you want, you can. But to be honest, I set my soft stop here. And let's see what happens. Because I'm quite sure that the price will reach again this price level here. And this is a really strong support at the moment. So wait, everything can happen. Maybe for trade management, we have a look at the weekly chart. Daily chart is not interesting if you work in 4-hourly chart. So let's see where we are about the big ship. Look at this one. Why actually it makes no sense to finish the trade. We reach the point of control punctually, exactly, yeah? And here we're circling around, so everything can happen in the moment. So there is no reason why we should intervene into that trade, okay? So, and here we go. As you saw, I'm switched to the weekly chart. And so here comes the question of the day. I just set a short pending order. Yeah, Sandra, where is my cactus? Ah, okay, there is it. So here comes the question of the day. What could be the biggest mistake in trading? What do you think? What could be the biggest mistake in trading? I have three answers prepared for you. Answer number one, a lack of discipline. Answer number two, less knowledge about the market. So basically, here comes the poll. Here is it. Or number three, to mix the time frames. So what do you think? What could be the biggest mistake in trading ever? And we will have it a couple of moments later on YouTube as well. So what do you think? What could be the biggest mistake in trading? So we leave it a little bit open, this poll, and I go through the rest of the charts. So we have another open chart. This is the FTSE index, Britain index, which means we stuck to the rules actually. And as you know, we switched the time frame for the indices to have a little bit more diversification in trading, which is one of the big secrets in trading. So and actually, as you see, we sold half the position at the top. And yeah, let the trade running. I expect that we will reach the point of control here. That is so basically my general target I want to reach. So, and actually there is no reason to intervene. The point is we hit exactly the last point 2, which means I trail my soft stop roundabout at the entry, okay? Not bar by bar, just to the entry. Yeah, we learned this about our analysis, about the past trades, that we can be a little bit, have more space if we reach target number 1, and you will see there is the last a smaller point 2 kind of support zone, and the price will go back to the point of control. So I see what could be the biggest mistake in trading. Almost 85% says a lack of discipline. We have 8% less knowledge about the market and just 8% to mix the time frame. Yeah, I will give you the answer, believe me. So what's on my watch list for today or maybe the rest of the week? So let's see. This is Hang Seng Index. First of all, point of control is relatively far away, 26,415 points. So we have a stable trend. We saw actually correction. And here we go. There was the balance candle, 2 balance candles in a row, then a very unclean balance candle. Now the market is going to react. And basically the most important thing with the first balance candle, we have a big volume on the lower side, which means, okay, there is a big fight in this day, in this candle, which means, okay, maybe the correction comes to an end and then the trend will continue, maybe, just kind of probability. So if you can afford this in your account, because for that you need a little bit higher, more money on your account, then take the smallest piece you can do, maybe 2 mini lots. For example, here we go. If you have this, then you can see, for example, Hang Seng 50 means you see you need at least one contract. If you cannot afford this, then you should delete this from your list, okay? If just only you must afford this about your trade, your account size, okay? So next one is South African. That's really beautiful because in this balance candle, we see higher higher volume there. You see, it's increasing volume there. And there I set my pending stop sell order on the way down because we have a lot of space to go down to the point of control. And as you can see, look at the left side of this market profile. There is no obstacle on my road back to the point of control, which could be really, really interesting in this. Okay. So next one, still silver. So, and yesterday, on Friday, we had this kind of balance candle with increasing volume. Therefore, I set my pending order here. So if you can afford this, you can do that. So we can check it on silver. Where do I have silver? Here we go. Here you can see, you can work with micro lots, okay, 0.01. So silver you can afford with a small account. So take one micro lot or maybe two micro lots that you can sell half the position in silver, okay? So still on my list is crude oil. We are far away from the point of control. We have a couple of balance candles, and therefore I set my stop sell order on my way down, okay? Give a little bit more space. You see we're circling around anywhere, okay? So then for today in our 4-hourly chart, yeah? So, and to be honest, Australian US dollar, we had a loss, and this is fine. It was technically correct. Therefore, it's a good missed trade. We stuck to rules. We had a plan. We followed the plan. Everything is fine. Okay. So now where we are again. So you see, okay, point of control is really far away, down to 0.7161. Okay. So, but actually, it's a kind of medium trend. You can only recognize if you have this. You see movement, correction, movement, correction. There was no close. There is, as a consequence, no trend break. Then the price went back, again down and down and down. And now maybe we will see this one. So we must be really carefully about that we don't miss this way down. But actually first of all, we have to stick to the rules. And now we have to wait if we will see a clear downtrend. This will not happen today. So therefore, delete it from your list. So you're not in danger to jump into the market. Look, I deleted tomorrow because first of all, I need a valid trend. And actually, I don't have a valid trend facing downwards. Delete it from your list so you're not longer in danger to do stupid things. Okay? So one of the most important things, you should stick to the rules. Okay? So let me give you the answer. What could be the biggest mistake in trading? A lack of discipline is basically right. It's basically correct. Yeah. But this is more a human part. It's not a mistake. You must learn to go deeper in your way of thinking, guys. You must learn to think in cause and reaction. And the lack of discipline is basically not a mistake. It's a kind of behavior which is based on a real why. Either you have a real strong why, then you can increase your discipline. If not, you will not have enough discipline. It's not a mistake as itself. Learn to think deeper. Stop thinking in these obvious ways, guys. Okay? Less knowledge about the market. This is maybe not really a mistake. It's kind of lack of knowledge. Yeah, but it's up to you. But what is a really big mistake? A really big mistake. Yeah, indeed, it's to mix the time frames. Why is it? And this is a big, huge mistake all over around the world. Online is published. You have to check the big time frame, then you find an entry in the lower time frame. Guys, this is one of the most stupid things ever. And this could be, there is no ultimate thing in our life. This could be the biggest mistake ever. And this is a training, this is education, deep education. Why is it? Think it through. Why is it one of the biggest mistakes, or maybe in my opinion, the biggest mistake in trading, to mix the time frames? That's why. Guys, in every time frame, you have different traders. In every time frame, you have different sizes of ships, like the Suez Canal, And in every time frame, you have different traders with different risk managements and with different plans. And every time frame has its own law of probability. Why you should mix the time frame? That makes no sense. A higher time frame is just only important for your trade management, to see how much space you have for that trade. Except of the point of control, by the way. That's the point. But to mix the time frame to find a better signal, that's wrong. Think it through. Why is it? For example, I repeat it, you must think it through. You will figure out if there is a 6 on your dice, which means you want to know if your setup works properly and works profitable. Then you just make a back test. But your back test is related to specific conditions. You remember the rainbow? If you want to make a picture from a rainbow, you need rain, you need sun, you must be there, your camera have with you, and you must make a picture. Just only under these circumstances you can make a picture. And the same you do with a back test. You say to your computer, please make a back test in this time frame, in this market, with these conditions in the last 2 years, and then you get a result. Why you should mix the time frames now? That makes no sense. If you want to have the same result like your computer did, you must make the exactly same trades in the future. Where is the sense to mix the time frame? I know, because I did it years. I know. It's the human part. Because you have a look at the big picture and then you find the perfect entry. Why? You are greedy, or maybe you feel fear not to have the best entry, to catch every single pip. And that's the human part. Therefore, mixing the time frames about your signal could be the biggest mistake ever. Think it through. If you go through the rest of your day, think it through, and you will figure out, maybe I'm right. Maybe. Think it through, okay? So I have a question there. The increasing volume is for buying. So this means that traders bought? Yeah. Could you please explain the correlation between the high volume, green buying volume, indicator buys, since the trend is going down, how this is an indicator that will keep going down? Now, the point is that you must figure out if you have a balanced candle. a balance candle. In this balance, you know, we have 4 rules. This is not a rule. This is just not a rule about the volume. The price or the volume is not part of the rules. It's just a kind you can add to increase the probability just a little bit, maybe 0.5%. And think it through, we trade prices. So we always, in the book map, we trade prices. So we're talking about buyers and sellers. Yeah. So, and the balance candle means, okay, there is a balance between suppliers and demand, supply and demand. So therefore, is there a really big fight that the big money forces the smart, the big money forces the dumb money to trade in the wrong direction, and on the other side they try to sell, or maybe vice versa in the other direction to buy? Then there is a big fight in the balance candle, which means high volume there. And this is a big sign that the correction or the move will coming to an end indeed. Okay. Therefore, just this is deep knowledge. Yeah. Therefore, it's a good idea to add this information that you have in this balance candle increasing volume. It's not kind of the rules. It's just, yeah, I give you a hand, okay? This is the point. So it makes sense to mix the time frames, because if you get the same signal on different time frame, your chances are much higher to be on the right bus. Yeah, and this is wrong. This is completely wrong. Absolutely, this is wrong. You will never have the same signal. Never. And maybe, yeah, I will explain you in a later session, not today, but I'm sorry, this is completely wrong. So think it through and you will figure out why. This is why people fail in trading. Obvious things. You believe what the people tell you online. This is not right. Believe me, it's not correct. So next on my watch list, British pound, Australian dollar. Lovely trend. We are waiting actually for a price above 38%, then a balance candle. At the best, the price will be rejected at the point of control with a wonderful balance candle with high volume in it, and then we can trade. So put it on your watch list, British pound, Australian dollar today. So next one is British pound, US dollar. And as I explained to you, you see, I just have it on my list to explain to you how the market works. So you see, we are within the red zone and we reach this blue rectangle here. And you see the price is fighting there. The trend is still old. And as I mentioned, look, this high volume zone there. That's high market volume zone. It's not so far away from the current point of control. And therefore I said, I don't make a trade there. The probability that I will have a trend continuation is really, really less. And I told you this last week, right? Do you remember? It's not that I can say, oh, I'm the smart guy, I'm right. No, I want to train you to read the chart. Okay, you have to listen. Don't have your own opinion. The market doesn't know you. The market don't care about you. You are nobody. For me, as your host, you are most important people for me. But the market basically doesn't know you. So stop having an opinion about the market. Follow the rules. That's the job you have to do. And that, by the way, the only way to survive in trading with your account, and of course, to, how should I say? Yeah, to become successful in the long run. Okay. So I keep it on my watch list that you will see the next days how the market is working there. So next on my watch list, New Zealand, Japanese yen. You see, we have a long way to go down to the point of control. So do we have a trend here? Yeah, we have one. It's a trend, but basically we miss a little bit a proper balance candle. Maybe this was one. And you see, in the last one, the volume is increasing. Yeah, but it's not a balanced candle. So look at the price on the right side. The price on the right side is going up, which means the smart money forces the stupid money to sell that they can buy. This is how you can read this one, okay? So we wait for the balanced candle, a real and wonderful and lovely and clean balanced candle, and then we can think about it. So this is on my watch list, New Zealand, Japanese yen today. So New Zealand, US dollar, still on my watch list. Point of control is up. And of course, you see, this is what I'm talking about. So now actually, you see, we have here an increasing number, increasing volume bar on the lower side, but this is not a balanced candle. So wait for this balanced candle. This balanced candle will be finished at 11 my time, German time, of course. And if you will have increasing volume bar on the lower side, then it's fine. But I have still my pending order there in the case that the price will jump up by anyone. So, okay, just have it on the watch list. Yeah. And of course, if you will follow me on Twitter, you will see the trades I'm doing there. And Twitter, you know, it's free of charge. You can open an account there. And my name there is daytrader70. And then you can follow and they will never miss a signal here. Okay, guys, I will add you to I will introduce you an additional setup for you. And of course, we will talk about the failed trades tomorrow. So let's see. And we want to add the weekly chart based on our exotic pairs. We need to do that because if we will catch a big move in the exotic pairs, it could be boost your account, okay? Therefore, it's just easy setup. It's the same like kind of trend trading, but in weekly chart, we consider basically the changing of the color. Because you know, Heikinashi is a lovely trend trading setup. We have a trend continuation candle, and we have a balance candle, and we have changing of the color. So what does it mean if the color changed in higher time frames? You can use it in smaller time frames, but in higher time frames, it's more valuable. You see, if the price changed the color during the whole week, then you can imagine that the smart money completely changed the secondary or the hidden trend, the smaller trend in daily and week, in daily and hourly chart and hourly chart through the whole week. And this is a big expression of the chart. So therefore, first example, US dollar, this is Chile. I guess this is Chile. I don't care about that. I just watched the chart. So first of all, the point of control is still placed lower than the current price. So last week, look, last week we had this red color, and it's really important. Where does it occur? Okay, it occurs in a stable trend. You see, during the last weeks, the price were not able to increase. Therefore, as a logical consequence, that turned the price, and now we're going down. So, but the point is, when is the market open? So on the right side, this is US dollar. Here we go. Click on the right mouse click, then specification. Oh, here we go. Here we go. Then go to the lower side. And then you will see on Monday to trade. It's open. It's German time, of course. You check it in your own account from 4 a.m. to p.m. to 8:45 p.m. So I have it in my watch list for today. It's just weekly chart, okay? Take just 2 micro lots. It's fine. You can work with that, but please add it to your setup. We need that. But if we catch a really big move, guys, we can make so much pips you cannot imagine in your most fantastic dreams. Okay, so let's do it. On the watch list, US dollar Czech krone. So you see, that's a lovely trend. And we had the changing of the color last week. By the way, regarding to a balanced candle with high volume in a correction zone. So we can maybe speculate that the trend will continue to the lower side. And to be honest, I'm quite sure that we will reach this zone. Okay, so I set my pending order with 2 micro lots or maybe 1 mini lot, so I can sell later half of the position. That's fine. So please put in your watch list US dollar Czech krone. And the last one, US dollar Polish zloty. So first of all, you see where the price rejected. Exactly there. This is a high resist zone. And last week, they changed the color after a big move. So during the whole week, they turned the price, guys. Yeah, the big money is there in. Okay, so the price will go lower and maybe will reach maybe the point of low, or if it's going really, really good, there's low, guys. And we need that. And if you will follow me on this show for a long time, I hope we can have this show for a long time, then you will see this kind of diversification. It's not mixing the time frame. We just make a diversification. In weekly chart, we follow the setup based on our rules. In daily chart, we follow the rules. In hourly chart, we follow the rules. Okay? Jesus Christ, time is running by. I could tell you how every day so much things. So tomorrow we want to continue. And if you have question, YouTube, please give us your like, ask your questions. I make your notes here on my, look, that's my notes. Look, that's my, oh, that's stupid in this. Yeah, sorry. You can see it right now here a little bit. So I make a lot of notes that I can help you. And guys, let's see each other tomorrow. I'm looking forward to seeing you tomorrow. About swap cost trade will last several weeks, maybe half year. Yeah, don't care about that. In balance, sometimes you get some swap costs for you, and sometimes you have to pay. In the rest of the year, during the whole year, you keep it in balance. Believe me, I do it for years right now. Okay, so guys, thanks for your lifetime that you were with me this morning. Sorry that I delayed with my time to this day. I wish you a wonderful, great start, a wonderful day. Get in touch with me on Twitter, on YouTube, and then we will see each other tomorrow. Have courage and be kind. And as always, guys, you know, may the force of the rules be with you. See you.